another episode of Bullish Chips, where we talk about chips and only chips, more specifically the Direxion triple leveraged semiconductor bull ETF, which goes by the ticker symbol of SOXL. Just a quick reminder, we are not financial advisors. We are not offering financial advice. What we are offering is our view on the price action of SOXL in today's price action, previous price action, and where we think it may go in the future. My name is Chris. Today is Tuesday, July 15th, and we're looking here at the week chart where we did break above last week's high, and we actually did break above the year flip line here at 28.13. However, we did pull back and closed inside of last week's price action. If we go down to the day chart, we can see that we've got a pretty solid red candle with a wick up top, meaning that there was price exploration above but not accepted, and we not only pushed back to where price opened, but below where price opened. We didn't fully close this gap here, so we do have a gap left over. We'll go ahead and mark that now. Alright, we'll just make that to 2027. Label this gap on the day chart from this price to this price. Alright, so we've got that marked in. So again, we do have the gap to the downside. But again, we did explore a little bit of price action above the year flip, so we did flip to full time frame continuity to the upside, where the day, the week, the month, the quarter, and the year were green. But again, we pulled back to where the day and the year are no longer green. So we're hanging right around it, but again, we're running into this monthly downtrend line. We're running into this weekly broadening formation. The flip does act as a critical point of inflection, so there will be a fight over it. So it does act as resistance prior to turning into support. So we can just hope that the price exploration above is just a peek at what's to come here in the near future. But we can't ignore the closing candle structure for the day, which is rather bearish. We can take away another bullish point though, that we did break above the previous high, so we did go make a higher high after making a higher low. So the uptrend is still intact, but we've got to keep in mind for tomorrow what today's structure looked like. Now, we do have some economic data that will be released in the morning. I believe it is PPI. Let me just double check, because we just had CPI this morning. PPI usually follows CPI. So if we bring up the calendar, tomorrow is PPI. Nothing really else tomorrow that's being reported, but PPI will be reported. So keep an eye on tomorrow morning before open. We will get that economic data, and it can play into how tomorrow tomorrow's price action will end up going. So let's get back down to these lower time frames and kind of talk about what happened today. We had a decent day, but a bit disappointing. We did participate in action to the downside and to the upside. We made profit to the downside, and we lost a little bit of money to the upside, so or in the contract for the upside. So that ate into our profits that we made to the downside. Again, all in all, we did end the day positive, so we can't be too discouraged. But we did didn't perform as well as we would have liked to, and price action didn't go the way that um, it could have went if we were going to maintain or start an uptrend on the hour time frame. If we look at the hour time frame, you can see we got the higher high here, so that's a good thing. After making lower highs previously, it was we got the higher high, but then made the higher low and then made a lower high at that point. So the trend was kind of flipping down, but we did get what turned out to be the higher low yesterday, the last hour of the day, because we got the higher high up here. We did pop two up on this candle, which locked in this higher low at the time. But as you see, the next hour candle turned into a red three, negating this higher low. Essentially, I don't want to say totally negating it because we still are above that low. Actually, I believe in after hours we might be below it. Let's see, this low is 27.21. Yeah, and after hours we're 27 flat basically. So we might have lost that higher low right there, depending on how price opens tomorrow. So we could get the 3-2 down, 2 up tomorrow, but right now it's not looking all that positive. So again, we were able to participate to the downside. It was earlier in the morning, so we were monitoring the 15-minute, and things were actually looking pretty good, right? Because we had it was a higher high. We got out of our calls for next week at that point, basically set stops, and then once this candle came into effect, the stops were hit. So we were able to take profit there. So profit on the swing. And we did enter to the downside. It wasn't on the 15 that we entered because there was no trigger on the 15. So we knew, entering off of the 5-minute, we were going to be in just probably a quick scalp. It did end up lingering a little bit longer than I thought before we got the drop, but we did eventually get the drop. So once I saw we got the lower high I'm sorry, not the lower high, but once that high was locked in there, and we broke the bottom of that opening candle, we had the gap. The gap is only shown here because that's how it closed, but the gap was up here at that time. So we're looking at a possible gap close. Internals were not, we'll just say that they were neutral. Let's see. Do I have I don't have them up. I can bring them up in a minute, but yeah, internals were neutral. So we could see at that time when we came down to the 5-minute, there was the higher low, right? That's what continued the descent down. We did not enter there with just the single higher low. We waited for a little bit of confirmation because let's go to the day trade chart. Yeah, because we were still so close to this opening print, right? So we wanted to get some type of lower high underneath the opening print to follow our rules. This lower high was above, so we could have always come 3, 2 down, 2 up, and went back up. It took a couple more candles than a 3, 2 down, 2 up, but it turned into basically a 3 combo 2 down, combo 2 up. But we waited and let this opening print be the resistance to look for the trigger, right? So we got the lower high here, and since it was a green candle, there are 2 pretty big green candles, and we got the 2 down. It wasn't in my mind a true 2 down, because yes, it went 2 down on this one, but if we're combining these 2 candles, the 1 and the 2, it still hasn't gone below this 2, so not really a 2 down. We did get that here though, right? So once we got the second lower high on the 5-minute, if you go out to our Twitter page, you will see the tweet that showed it was about 9:30. We entered some puts on the lower high underneath the opening print. That was basically underneath. It wicked above it a little bit, but once we got the second lower high, we entered puts. We had, let's bring up the scalper chart. So we had this 261.8 fib, and there's another fib underneath it, a fib extension underneath it. I can zoom out to, let's go to like the 4 hour. Yeah, so if we make this bigger, you can see we have this move and its pullback. The fib extensions are these red fib extension lines. So this 50% one lined up with this 261.8. That was our first target within the gap, just on a scalper's level, because we have to still take in mind the momentum is still moving upwards on a larger time frame, right? People are still really bullish on the market. We haven't seen any real sell-offs or anything like that. So me personally, I'm in and out with my puts at this time because as of right now, we're having a tendency to bounce off of pullbacks, right? People are buying pullbacks. They're not selling weakness. So we wanted to make sure that we had reasonable targets, just not expecting a full gap close. It was a pretty big gap. And with the momentum that we have, even with yesterday opening down, it pushed, we had a basically V-shaped recovery in intraday yesterday that pushed us off. This, the sell towards the end of the day was kind of expected, and it was kind of actually bought back up a little bit at the end of the day. Didn't quite flip green, but so momentum was still going up. We're still going up. We're still in an uptrend over the longer time frames. So we didn't want to be in there too long. So we had some target sell limit orders here, or sell limit orders. So we had them set to sell at 27.79. I had all of my puts set to sell, but as we were coming down, I felt like we were possibly gaining more steam, especially with the rejection off of this fib extension that is part of this fib extension that's overlapped right here. So the 61.8, I thought, we would at least get to the 50, because rejection off of 61.8 a lot of times will send you to the 38.2, but your first stop is always going to be the 50. So we had the sell there. We let one run. We got the lower high, which is what we were looking for, and we pushed below the 27.29, but we got a higher low. So once with my runners, a lot of times I'll just move my stop to the if it's a put, then I'm going to move it to the high of the previous candle. So I just keep moving it down as we go down. So it's a scalp runner. It's not something I'm just expecting to sit in all day. Otherwise, if I was going to sit in it all day, then I would leave my stops, at reasonable higher lows, or I'm sorry, higher highs and things of that nature. But so I had it following the candles. Once this candle was set in, it did go 2 down. I was thinking, all right, let's go at least to this 38.2 that correlated with this hourly uptrend line. I thought we were at least going to get to 26.96, but instead it reversed with the 3. It turned into a green 3. My stop got hit. Wasn't mad because I still got pretty much most of the move. Let's see, the 27.29, the top of this candle was 27.35, so I 6 cents in underlying after the move that I got from, was this 26, we got the higher low, 26 or 27.96. So we got 50 to 60 cents worth of move there, which isn't too bad. But what we did do after that, because we got a pretty healthy bounce, with the slight rejection there at the 61.8, but the push back up above it, that it really turned our eye. Well, we had got off the 5 minute after we got out anyway, and looked at the 1 hour, and looked at at that time, it was this candle that we were in. So we were looking at the two down and going possibly two up, which would lock this in as a higher low. And when it did, we entered contracts when it went two up, contracts to the upside calls. So again, you can follow us on Twitter and you can see our trades throughout the day. We tweet real time of our entries and exits. Um, let's see. Let's get to this 15. Yeah. So once we got this red three, that kind of put my got alerted me that, hey, we may need to watch this. So I went down to the 5, and we got a lower high. Why? Come on, Thinkorswim. So this was the red 3, and then it pushed down. We got the lower low, right? So it went lower than this low, and at that point I'm like, okay, probably need to look at getting out of these. We pushed up to go 2 up on this candle first, and so I set my stop at the low of this candle, and because at that point we're getting towards the end of the day. We had really kind of just moved sideways all day, so the bulls might have been putting up a fight and just been getting exhausted at that point. I didn't want the rug to get pulled out from under me. Although I do have the August puts, I did sell that's the other thing. I sold the puts for next week at a slight loss when we went higher low on the hour, when it went 2 up. Probably got rid of those a little earlier than I should have, and now definitely in hindsight, with us down at 27 flat, I did get rid of them early. So I did take a small loss. It wasn't big, but that's why they were gone, is because I didn't want them to become big losses in case we continued to push up going off a higher low in the hour. So kind of disappointed in that as well. So that's I had almost forgot about that. But what was I going with this? We got stopped out at a slight loss on those calls as well. So actually, now that I think of it, probably ended more close to even on the day. Might have even taken a small loss on the day. I've got to go look at, go total it all up and look at the puts for next week that I sold. The small loss that I took on those combined with the small loss I took on the call here, which again wasn't big because I got in at the 2 up on the hour, which was either this candle or this candle, I can't remember. Or, I'm sorry, this candle or this candle, I can't remember. So let's say worst case scenario, I got in, at this high is 27.79. Worst case, I got in at 27.83. I got stopped out at 27.59, so that's 23. We'll give it 30 cents. That of loss that I went through there. So compared to the 60, so that was probably half of that. And I probably finished even on the day when I sold those puts for next week. So no biggie. Still got puts for August, so we're still covering the calls that we've got, but we're getting really close to selling the August calls and September calls, because again, we've talked about this previously. Tech's seasonality comes to an end towards the end of July. We're now on the 15th. We're going to start moving into the second half of July and starting tomorrow. So we may be getting ready to go through the seasonal pullback, and if that's the case, then we're going to take the profit on the calls that we've been in for 3 months now, and use that money to buy puts if we're going to have a longer or a more substantial push down, or just sit on that money and just wait for entries back to the upside at end of August or September. Sometime after, if we do go into this seasonality pullback, um, in the next, wait for a couple months and get into, by then June 26 contracts should be out, so we can, start to load up on those. Maybe grab some more 2027 contracts. Just get ready for that part of the year. Hopefully we have a good push in the winter, like we usually do, a good push at the beginning of the year. But we've got to see how everything goes with rates and geopolitical stuff and all that goodness. Um, but yeah, that's pretty much the day. That's how that went. Let's pull the hour back up again because we do want to take note. We've got the downtrend line in here now. We've got the high to the high, and it's broke below the low. So that locks in the lower high there on the 1 hour. The 4 hour, we're still looking decent. Again, a lot's going to depend on after hours, and even look, we're back to 2708. I saw 2712 a second ago when I was looking. So it looks like there's some volatility in after hours. Who knows? We could be, above 2729 come open tomorrow. But again, we still got this gap to fill here, and let's just make sure all of our charts have the right information on them. That way they're easy reference. Alright, let's go just to 27. Alright, so we've got our gap here still to the downside, which can be filled. We could just be making a broadening formation here, from here. Oops, let's get the right tools out. From here to here. Let's make it gray for a 4 hour broadening, so you can see we've got a broadening formation here. This could pull back. Look at that bottom of the week's expected move. If we follow this weekly or 4 hour broadening formation, it's lining up perfectly for towards the end of the week to be hitting that 4 hour broadening formation. If that's the case, I'd expect us to wick down past this expected move, flirting with this monthly downtrend and the week and quarter flip. If we get below the week and quarter flip, now we're probably looking at, okay, seasonality is probably over, right? Because on the day chart, that's gonna have its effect as well, right? So although we don't have like a lower low on the day to make a broadening, you can see the 4 hour one here, and you can see how we pull. If we pull down below this, now we're starting to look at that lower low, and then we bring back into play last year's low, right? We get this gap from 3 Mondays ago back into play, so it's very, very easy to see us going down. We do have this weekly uptrend line right here, this purple dash line. Again, trend lines don't dictate how we trade. It's more horizontal lines, but we do like to see if there is confluence between horizontal lines, broadening formations, and or trend lines. So I can see us going to the downside if economic numbers are not good, or anything really popping up. We've got quite a lot on the list. I didn't go through what was released on Thursday and Friday, but we do have numbers being released then as well. So let's go ahead and remove today's opening print. Let's go down to our day trade chart, activate the 4 hour up trigger. Oops, remove the opening print. Alright, get the 4 hour down trigger. Let's move that to the second 4 hour of today. And let's see, previous low a day is going to be there. And previous high a day is going to go to today's high. Alright, so just like that, we've got the move on the day trade, and then on the scalp chart, I know it's a little harder to see. remove the opening print, move the 4-hour up trigger, move the previous high of day trigger, or mark, whatever we want to call it. We get the 4-hour down trigger moved, and we'll get the previous low of day moved. Okay, we'll get the overnight high and overnight low moved tomorrow, but for now we have got our 4-hour markers moved. And let's just zoom back out one more time to look at things. Just on the day chart, right? So this is a lot of chop right here. A lot of chop, a lot of chop, a lot of chop. You know, a lot of trading. So it's like a whole nother trading zone up here. We had the one down here. If we were to just draw a box, you know, we got this trading zone here, and then we got one above it. And a lot of times these zones, max 1 day, a lot of times these zones will just be double each other. So let's do this. Duplicate. And if we put this here, yeah, I mean, we can see a whole nother trading, that's another trading zone with the gap right above it. And we can see if we doubled that one, that's going to be this trading zone, right? Almost perfectly. So you can see we're fighting to get into this next trading zone. That's why we've got so much mess right here, right? A lot of days closing and opening and getting action all around the same level, right? Just how it was over here. Got all of this, right? So if we're gonna push, that's gonna we're gonna need a push, a real push. Get through this weekly broadening. You know, we're above it, but we're still riding it, right? We're not totally above it. Getting into this weekly broadening, right? We're not there yet. So if we do reject, is it reasonable to target the bottom of the range? I don't know. If we started running hard and real deep, real hard, it's possible. We've got gaps, gap here, gap here, gap here, gap here, here, and here. Getting back to the $10 range would be pretty crazy. If we did, I'd probably grab more shares personally, because it's nice being able to sell contracts when prices are high. When we get back into those 40s, 50s, 60s, it's nice selling then. So I'd add another 100 lot to my holding that I already have. It'll be a big drop, but this is a triple leverage ETF, so with the big run-ups come the big drops as well. So you have to remember that. The shares I do have in SOXL are just a small percentage of my portfolio. They don't really dictate any real movement in my shares portfolio, but they do come in handy if I want to sell contracts. So anyways, let's get back to what it is and what we're trying to do, which is set up a plan for tomorrow. So let's go back to our day trade chart. Let's get down to the 4-hour. Right. And let's take a look here. Right, so we're still really just in the middle of the week's expected range, right? Nothing crazy. We do have a red 2, which is a failed 2 up, with a red 1, which is an inverted hammer, and at the bottom of the previous candle. So again, not very bullish. I thought we had them all, so, but I guess not. Let's fill this gap in real quick. Alright, let's make that 27. Alright, we've got our gap. So we can see a 2, 1, 2 down doesn't have very much magnitude, but it puts us at the top of this gap, which could give us reason to for continuation. This hour, let's spread this out. Yeah, this hour downtrend line might be a little steep. Especially if we're not opening in the gap, it might be a little steep to try and stay under initially, so we could get a pop up, but if it's going to respect it, it could still pull it back below after a pop in the morning. Quick fake out to the upside before a push back down. But yeah, probably looking for bearish action tomorrow. Again, PPI is going to be a big factor in that. So I'm not in the habit of making predictions. I like to be ready for either side. Sometimes, some days like today and a few days last week, capitalizing on both sides of the action in one day. So I just like to be ready. And so let's go ahead and do that. Let's get our notes for tomorrow. Oops. Alright, so tomorrow is the 16th. There will be 115 trading days left tomorrow. We closed at 27.29. Yeah, 27.29 was the close price. We are still red on the week, so we're looking to go green at... No, I'm sorry. Why do we have... We're mismarked here. We're mismarked. So we are green on the week. It goes red at 26.63. So we're green on the week, green on the month, green on the quarter, red on the year. Right? We've got our expected move, which we're still in the middle of. We've got our gaps. And we do actually need to add this gap. So let's take that. Oops. Let's take that. And it is a gap below. So we just add that there. So we've got this gap below us. And we'll make that a failed 2 up. Red 1, 2 down. The trigger is the bottom of this 1, which is 27.25. And our magnitude is the bottom of this 2, which is 27.21, which we talked about is not a lot of magnitude, but that puts us at our gap. Gap closes at 26.77, 26.77, and we'll just denote that this is a gap close. And our second target would be 26.60. That week flip is too close. I'd say the week's last week's 50% again. 26.17 gives us a good little bit of magnitude there. Let's just make sure. Yep, the lower low is still the same. So this would be a failed 2 up, red 1, 2 up. So the trigger would be the high of this 4-hour candle, which is 27.83. 27.83 with the magnitude of the high of this candle, which is 28.46. 46. And let's see our next target. Let's get down to our scalper chart. So even 28.68. We'll use that 28.68. Okay, we already have that there. So do we have another one? We're getting really level happy with all these fibs in here. I don't really want to put another one. But let's just say we'll go 29 flat. There'll probably be a lot of calls there. We can go look, but I'm just betting that there probably is. 28.46 is the higher high, right? Oh, no. That's not, because we haven't gone 2 down on this candle yet to lock in that as a high. So let's get out to our Let's remove that. Remove that. Let's find what our next higher high is on the 4 hour. So we've got this high right here. So that would be 31.96, and that's what we've got there. But what comes after that is this high, and that is 32.64. We'll put one more out there just because those two are so close. We'll get this high, which is 34.94. Alright, so then we'll move on to the day, and just remember that the magnitude for the 4 hour, whenever it's a strat, is the trigger for the 1 day. So there's the magnitude, there's the trigger, and let's get on to the day chart. Let's get back to our day trading chart so that we have all of our markers, so we can see the to the downside, the low of 27.21. We've got that as our trigger. The magnitude, so this would be a 2 up, 2 down, with the low of 25.32. 32. That's just a regular 2 up, 2 down. Probably wouldn't really have any. That's a big drop for 1 day. If we open here, that's not that big of a drop. So the next low would be this candle, which is 24.62. Yeah, 24.62. And 24.38. Alright, so we got 24.62 as an extended target, which also happens to be a lower low. So if we look at this, on a day it would be a failed 2 up, 2 up, so there would be no magnitude because it's not a strat, it's just a continuation. Right. So the trigger is 28.46. Target. Because we're starting the day, it may start the day out so low. We're going to use these as our targets, and then 29.67 is right there for our last one. Right, so we do want to underline the week's 2 up, 2 up to signify it did trigger. We went above 27.73. However, we have not reached that target point. Not only did we not reach that target point, but we are back below the 27.73, which means, we're not going to have it bold. Like if we do here, the bold means that, the strat is in force, but this is not in force, it's not a strat in this case, a strat reversal, it's just a strat continuation, but it's not in force at this time. To make this a red 3 on the week, this would have to go lower than last week's low, which is 24.62. Yep, we've got that marked in. And then this would be target, because it wouldn't be a magnitude. Actually, yeah, it would be a magnitude. There's a 3. Oops, yeah, 3 is a reversal in and of itself. So there we go. We've got our levels marked out for tomorrow, our triggers, magnitudes, extended targets, triggers, magnitudes, extended targets. So for the 4 hour, we did our day to the downside and the upside. We flipped this to let us know that it would be a 3 if we do breach this level, because we did initialize the 2 up, 2 up continuation. So that's what we have to look for. Watch, for the week to turn red. if we start going down, like I said, we've got a pretty clear path to the downside, and it wouldn't necessarily be the easiest path, but we know where all the stops would be, right? So if it is going to go, we're going to get to that 50% of last week again. We used it as a bounce point yesterday, but if we test it again, a lot of times, the more times you test a level, the weaker it is. So maybe we get another bounce, but we only bounce up to here, or flip the week back green for a minute before we drop again. Who knows what's going to happen, but we've got our levels, the 50% of last week, the low of last week, which coincides with the flip for the month and the quarter, the low of last year, and then we've got our leftover gap down here in last month's 50%. So we've got levels that we know it can go to. We've got these weekly, daily uptrend lines that can kind of coincide, like with the bottom of the gap, with last year's low. So we use those horizontal lines in conjunction with the other lines that we've got, and we don't need to guess, we don't need to predict, we just respond tomorrow with wherever price action takes us. So looking back over here, we're back at 27.13, we were at 27 flat. Let's see, SOXL, it's down 17 cents, which equates to 0.62%. So not a lot of underlying price movement is needed for a high percentage of movement on this stock at this price. So we just want to pay attention to that and watch where we open up tomorrow. Watch for PPI numbers to drop, and be ready to make money up or down. So I hope you all enjoyed today's episode. If you did, give it a thumbs up. Do all the YouTube stuff, like, comment, subscribe. Let me know if this was a good video for you. If you feel like I could have gone over things a little bit more in depth, or slower, or gone through things faster, or skipped something, let me know. I'm open to constructive criticism, but I hope we're building a nice little community over here of people who have a plan, stick to the script, follow the rules, and which produces consistent profit. That's all that matters. So again, I hope you enjoyed tonight's video. Get some rest tonight, wake up tomorrow refreshed, knowing what the possibilities are, not guessing where we're going to go, but knowing what the possibilities are, and being able to respond, and let's make some money tomorrow morning. All right, have a good night.